Hey everybody, Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Welcome to the channel. Welcome to another start of a trading week. We got lots to cover here in a very short period of time, so let's get to it. We are starting with earnings season. We kicked it off a little over a week ago here, and we trade earnings a lot. We do it two different ways. We trade stocks that are getting ready to where we think are going to break out and move big, and we think about stocks that are going to consolidate and be quiet through their earnings cycle. Last week we did Discover Financial. Yes, Discover Financial, DFS. Let's take a look at that trade. So we did get some movement. Now, this was interesting because the earnings call came out in the morning. We had before market open earnings on that day. And the stock really didn't move, and everybody was waiting for the call, and the call came, and boy, the stock started to rally, and by the end of the day, it was up several percentage points, but it just didn't quite move enough for us. So the following day, we were looking maybe for some follow through. We got really close. If you look closely at the risk graph, okay, where we modeled the trades, the horizontal line up there that is kind of aqua or light blue, that horizontal line is our upper break even in the trade, and you can see we just touched it barely. And so when we did, we were looking to exit the trade, and in the end, we exited at a small loss of $83. Okay, now we consider this actually a good trade, and the reason why is because we controlled the amount of risk that was in the trade, and we controlled the trade throughout the process, and in the end, we only lost around $83. So not too bad. We don't like the losers, but we don't like to lose big, so that's why we trade with, as they say, as the saying goes, and it's been around the industry for a long time, and that's trade small, trade often. All right. So let's get into the headlines and find out what's going on here. There's with all the news out there, I was looking for something kind of unique. And in the headlines is, Express, the retailer, is in bankruptcy. All right. And they're closing 100 stores in order to save the brand. Now, what's interesting about Express is that they had at one time, and I looked it up because the article the information that I was getting was all talking about the restructuring and not talking about the employees. All right. And at one time, back in 2014, Express had 19,000 employees. And over the years, it shrank. And of course, during COVID, they hit their lowest employee count. But since then, the employee count kind of bounced back up. And now, most recently, they have a little over 11,000 employees. And I looked a little further, and I think the official number is around 14,000, if I'm not mistaken. And all of those will be laid off. All right, 14,000 people laid off. Now, there's tons of other retailers out there, but again, this affects them directly. So that'll be interesting to see how that how that all occurs. And then changing gears totally, the big news last week was about Bitcoin and the Bitcoin halving. Now that was scheduled to occur on Friday. Well, that was the date, but it was somewhere between Friday and Saturday that did occur. And today it rallied over 2.25%. Bitcoin is up after the halving, and we have seen this every 4 years after the halving. We see the coin kind of consolidating or even dropping going into the halving. The halving occurs and then rally. So we could see this rally, this breakout rally continue. We're not big cryptos, and my apologies for my little puppy that decided to wake up from a nap in the background. But so in other news, we have Tesla. Tesla is making the news once again. We have Tesla dropping on just following through on everything. Now, what's interesting is Tesla has earnings this week, so we'll see if this move is baked in. But it did break some major support. This was major of a pivot support from back in, let's see here, 2020, well, a year ago. A year ago, it was trading at 154. That was a major pivot point, and now we have broken that down below over the past couple days, and today we're down at 142. That's down over 3% off of Friday's close, so that's a stock to watch. And really, speaking of stocks to watch, it's earnings week in full this week. We begin with over 800 names this week declaring earnings. So we are now in full earnings season mode, and this brings with it a lot of opportunity for us. Now, we like to trade kind of a delta neutral style. That means we trade non-directionally. And some of those non-directional trades, as I mentioned at the beginning of the show, and the stock can move either direction really big and we can make money, or using other strategies, the stock can consolidate and go nowhere and we can profit from that type of move as well. So let's jump into look at the markets. We have lots going on. Interesting day today. As I pull up a chart of the SPY, this is our proxy for the S&P 500. And after, just 3 weeks of sell-off here on Spider, we bounced up. Now, my target on SPY was 495, and we hit that on Friday. Remember last Monday, I said my target on Spider is 495, and we hit that on Friday, and now we are rallying off that. So another reason we are rallying technically is I'm going to bring up a Fibonacci retracement tool, and I'm going to go off this latest pivot back here. This is I would call this maybe an intermediate pivot. All right. And I'm going to that's the beginning of that move, and come up, and I go close to close on my analysis, because closing prices are the most important prices. Highs and lows are irrelevant. All right. And look at this. If I zoom in, look at this. We bounced. We not only bounced, but we closed right on that 50% retracement from last week. Okay. Friday's close was a scary candle, but that closed right at the 50% retracement of this whole big move that we see. Well, the big move from January, okay, and it retraced. Now, where do we go from here? We're going to give it a couple of days before we do our next set of analysis, just to see if this might be a V bottom. And this would be a higher low, by the way, as a continued bull market. Even though we've pulled back quite a bit, that we are nowhere near a bear market, and we could see maybe a V bottom and rally higher, or we could consolidate here before the next move down. We shall see. All right. Now the Qs, guess what? The Qs did the same thing. Sold off, and we had a target of 420, and guess where we are now? We're at 420. So we blew through it on Friday. We closed lower. So breaking out of that sideways pattern that I identified up there at the top, you can see we were churning around, and finally we got that big candle. And then really the sell would have come on Tuesday the 16th. Okay, and then we had this little push downward. Now, if we apply that Fibonacci here, I don't know if it'll do the same thing. Oh my goodness, look at that, 61%. Came right down to the 61% and held. And you might say, oh, Jeff, look, it broke through there. It did not stop right at your 61%. Well, consider this, these support and resistance areas when it comes to technicals. When it comes to support, imagine it like wearing a life vest and you jump in the water. You don't jump in the water and just go smack and you stay on the surface. You hit that surface and you drop below, and the life jacket kind of brings you back up. All right, same thing here. So that's the way support works. You break right through it and you pop back up, and we'll see where we go as the stock market today is getting a nice breather. I mean, we're up nice and healthy. S&P is up over 1.3%. Qs are up over 1.3%, and IWM up over 1.4%. All right, now This one did not quite get down to our lows. My target low. My target low was 190. We got down to 191 and change. All right, so we didn't quite hit that. All right, but same kind of thing happens here. Now this is a pretty deep sell-off off of this pivot low back here, but we will see interest rates are kind of stable, as I will show you in just a moment. But IWM is also rallying and having a nice day today. So let's get into some of the commodities here. Let's talk about oil. USO is our proxy here. And interesting, we got up here and everybody was thinking we were on a direct path to $100 oil. But WTI as well as USO have paused and sold off. And we have this nice little flag pattern that did not last very long, lasted just over a week. And we broke down through it last week. And here now we're just kind of trading a little lower. We're off the deep lows today, but we got close to 77.5. As you can see here, I'll zoom in a little bit on that. And we bounced right off of that. Okay, 77.5, just above that. And now we're trading at 78.43. So we'll see if we climb out of that and have a good day on oil. But good is relative. Of course, as a consumer, you don't like high oil, or that translates usually into high gas prices once it's refined. But as a trader and you're long, you want oil to go up. If you're short, you want it to go down. So that there you are. I mean, you have your people that are happy, and you have your folks that are not happy on this little sell-off here. But we'll see where it goes. I think this is kind of ease, partially caused by the ease of tensions in the Middle East, which really is affecting gold and silver today. My goodness, what a drastic change in these. Look at this gap down. Boy, we started consolidating into smaller candles there. And this is one of the things about my hike and a she candles. Notice here, as we had that rally, look at these big green candles, no wicks on the bottom, and then having a candle with a wick like we did here on April 10th is not a big deal, okay? But when your body start getting a little smaller and you start getting wicks on the top and bottom, I call that getting wicky. And anytime we get wicky, we change directions. We have a reversal. So here we're going up. Now we look to be headed down. If we were headed down, that wicky action means we're about to head higher. So it's very interesting that we dropped this hard today. And the news is the Mideast tensions are easing. Iran doesn't feel like it needs to really take action against those who have violated their airspace, and that tit for tat seems to have eased a little bit, but everybody was on pins and needles, and that really sent gold and silver higher. Let me go back to my regular candles here. We'll go over to silver. So gold's down 2.5%, but silver, boy, just getting clobbered today, down over 5%. What a move for silver. It really is taking it on the chin. And I would look for 25 possibly to hold, and then for maybe a little relief rally. I think this is really overcooked on the metals, but we'll see. The dollar's rallying, or was. It's currently, it is rallying today. It closed flat on Friday, but today it's rallying. And, that's kind of where we are. But, man, big reversals on gold and silver. Now, the big market movers that we've been watching here are let's go. Well, that's the 10-year. Let me go to the TLT. This is the iShares 20-year Treasury bond ETF. This is the long end of the curve, and we have paused at the current level here. We talked last week. It looked pretty ominous as another push lower, but one day gap down, the next day gap up, and then we move sideways. That has been the pattern. So this is, rates are a little bit higher today because we are down about 25 basis points, so that means rates are a little higher. And but we seem to have paused, and that's a really good news because this doesn't look good, and everything that you want to put on here when you start putting moving averages and other studies. This is, we had this bearish cross here. Now, the two moving averages that you're seeing here, the red or reddish moving average is my 21 period moving average. Okay, yes, that's my 21 period moving average. And the long is a 161 period moving average. We did happen to have that kind of bearish cross last week, which is pretty ominous. I mean, to tell you, for these two, you see they crossed to the upside back in December, but that was after a big rally. I mean, the market really needed to rally. What I want to put on here is my 10 period, and you can see here that if we look at putting the blue, that's the blue line here. We last crossed this back on March 20th. That's when we had a bearish cross back to the downside. And as long as price stays below that 10 period moving average, that's a pretty ominous sign. And you can see the spread between the 10 period and the 21 period is getting wider and wider. And that is just not good. I mean, that means rates continue to move higher, and we anticipate that they will. Let's look at the short end of the curve. That would be SHY. All right. And we see a little bit of rally here. We dropped hard back on the 10th of April. That looked very ominous. Okay. I'll put in a little bit more data here so you can kind of get a sense. I really thought we were headed down to this 80, $80, 80, 90 level. Okay. $80.90. That level. That's the middle of all this support and resistance back here. And I thought we were just going straight there, but we have paused. And as you can see, we rallied back up to the 10 period moving average, and we're having trouble getting above that. We rallied above it today, but look what's happening. I'll zoom in this. Let me recenter the chart, zoom in this a little bit more. We are now off the highs of the day and pushing down. That means interest rates ticking up. Okay. And I would not be surprised if we do close below that 10 period moving average, sending rates a little higher for today. So with that, let's get into our inverted yield chart that we like to look at. This is the 10-year versus 3-month treasuries. And boy, the powers that be are doing their darndest to flatten this curve and get the long end of the curve up above short-term interest rates. They still got a lot of work to do. We're at 83 basis points now. We were at 90 last week. All right, so that's a pretty good accomplishment. That roughly 7 basis point move to flatten the curve. But there's still more room to go. And you can see what happened last time on this chart where we got up to, I don't know, maybe 75, 70 basis points. They're in the November of last year, and then back down we went. Okay, and we'll see where we go. Overall, it's higher for longer on interest rates. I've totally taken off my June rate cut, which I had at the beginning of the year. Fortunately, I only had 2 rate cuts that I felt were going to be made this year, so I only have to retract on 2. Goldman Sachs needs to retract on 6. We're going to have to redact 6. They said there would be 6 this year, and where they got that from, I don't know. I think they're paying their economists too much. All right, so but anyway, I think maybe there might be a gratuitous one back in the fall, but that's a long way. That's 6 months. There's a lot of data to come out, and that would be right before the presidential election. And I think the Fed is now hands off until the election. So we'll see. I think that might be the way that things are going to go. And I think the risk, here is your hot sports opinion, the risk is to the upside. I think we could have, if everything kind of continues on trend and we continue to spend like crazy as a country, that we could see higher interest rates going up. I mean, the Fed rate going up again at some point. That's where the risk is right now. So pretty crazy stuff. But let's bring it back, to how that affects you in the higher and longer when it comes to interest rates. Interest rates have paused today. We hit that 7.5 mark last week, came off of it just a little bit. And to be honest, as I was telling a colleague of mine, this is average. We're up here in this average range, at 5.5 to 7.5 to 8. Interest rate on 30-year mortgages is still relatively low and reasonable in the big picture of things. You may not think so in the last 10, 15 years as people got the lowest rates ever on their mortgages, their lowest interest rates. Even mine, I was tied to the LIBOR. My 30-year mortgage was tied to LIBOR, and I knew exactly what that was doing. That was dropping like a rock, and my interest rates were dropping like a rock, and I would refi every few years. Okay, and I got that thing down so low, and it's just because I was paying attention and knew how the markets work. So, but I think that is, I don't think we're ever going to go back there to some of those lows. I think we're right back up to where we have been on average, and hopefully we don't get up to what we had back in the 80s or even the 70s, where we had double-digit mortgages, okay, 13, 14, 17% on mortgages. So we're still well off those highs from back then, all those years ago. But more to come. All right, let's get into some trades. All right, so we have a busy week this week with earnings. And here on this channel, we do trade a lot of earnings, and I've talked about that a couple of times already this session. But let's bring up the earnings releases for this week, and like I said, it's a busy week. There's over 800 companies, and this is just a list of some of those that are the most anticipated or have unusual option activity. All right, and so today we've already had several today. After the market close, we're going to have SAP and Nucor. Tomorrow it really gets fun. In the morning we have GM and Lockheed Martin. Okay, some to look at: Spotify, Halliburton, GE, all the names you know. Okay, you know and love. And then tomorrow afternoon we get Tesla, Visa, Texas Instruments. Just these big, massive companies declaring earnings. And as we go through the week, we have AT&T on Wednesday morning, Humana Wednesday morning, Boston Scientific and Hilton Hotels on Wednesday morning, and then Wednesday afternoon after close, we have Meta, IBM, Waste Management, O'Reilly Auto Parts. The list just is of names, or just household names. Thursday morning, Wednesday, that doesn't even, all those names just almost supersede the economic reports that we have coming out. We have durable goods on Wednesday. On Thursday, we have GDP, growth rate numbers, quarter after quarter. Those numbers come out. But Thursday morning, we have Merck, Altria, Southwest Airlines, Caterpillar, Hertz, Hess, more. And then on Thursday after market close, you got Microsoft and Intel, Roku, T-Mobile, Capital One, etc. And then just the hits keep on coming. This is just this week, and we have weeks and weeks and weeks of more coming, as earnings season has just begun and we are on a roll. So with all the news and all the stocks out there that we should be aware of, where are we focused this week? We're going to be focused, of course, on the newsmaker. We're going to be focused on Tesla. All right. Now, before I get to the trade, as we get to the trade, we can leave it there. I do want you to know that one of our strategies we do talk about, which will be this strategy, is available to you in a free guide that we have available at ewotrader.com /straddle. Okay, that'll appear here, and we will throw that link up here, and you can download that guide. It's a free guide that you can see that on how to trade these breakout trades. Okay, and these are the ones that can really make some significant dollars on a stock that has an unexpected move or unexpected news on it. All right, so let's go back to the stock chart and let's take a look at the strategy. This is a strangle on Tesla. Tesla has its earnings announcement, as we saw. It's coming up tomorrow after market close. All right, so there is still time to get into this strategy. And now a strangle will cost you around $1,200, $1,300, $1,400, depending on what implied volatility is doing. But what we're looking for here is a big move out of Tesla, and for it to jump either higher or lower based upon its earnings report tomorrow. So that's it for today. Hey, if you like what we're talking about here on this channel, please like and subscribe. We do it every week. We have a trade for you every week, and we talk markets every week. So listen, have a great trading week. Good money management, okay? If you're trading out there, use good money management, and we'll talk to you next week. All right, take care.